I'm Chris Preston.
I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network, which has been delivering investment advice for more than half a century to individual investors. Brad, day after Halloween, that's known as calm after the storm here at my house, where we had probably about 400 trick-or-treaters. I think we had 10 pieces of candy left.
That's
Uh,
nuts.
yeah, sounds like you had a lighter night. You're on the other end of the spectrum from me.
I think we got up 10 times. We probably had 40 kids total. We have
Yeah.
a full box of full-size candy bars and mini candies and all leftovers. It's like we got like half the visitors that we got last year. And my kids went out on their own, so my wife and I just watched football and a scary movie. It was
Nice.
I'd call it whiplash, but it's not like we were coming from the highs of 400 visitors and just constant doorbell. Wait, you have a dog. What do you do with your dog?
Uh, she was mostly inside, but she got out a few times, but stayed on property. So that was good. We had friends who showed up who she would recognize and go out and play with, but we didn't lose her. So that's good.
My dog.
We didn't lose the dog or the kids, so we're 3 for 3.
Were the kids successful? Did they like come home with a huge haul and just like dump it all over on the table and all that?
My son is very savvy about, he's 10, very savvy about that. He has a ton. My daughter, who's 8, I think is almost too deferential in her trick-or-treating and had a smaller bag, but she she took what was left of ours. So I think they're close to even now. But so yeah, I'm glad we're past that. Other big events coming in the next week that hopefully next Friday we'll be glad we're past. Um, but speaking of which, tell people what we're going to talk about today.
So we had jobs numbers come out this morning. We're going to touch on that a little bit. Obviously, need to talk about Q3 earnings, which has been a little bit wild.
Yeah.
And then we are going to talk about maybe expectations for volatility next week. And then we're also going to do a little bit of a guessing game around politicians and investing. We're not going to go too political, but we'll see what their investing temperaments look like.
Yeah, it's a good time for that with election next Tuesday to just it's a timely subject. But before all that, as usual, is defend the take. And this week, you're up, Brad. And your take, for which you have 90 seconds to defend, is that there was a secret recession warning in Warren Buffett's, aka Berkshire Hathaway's portfolio. You have 90 seconds. Go.
Okay. So, right now, JP Morgan is calling for like a 35% chance of recession this year, right? Raising to 40% next year. The American Bankers Association is somewhere in the neighborhood of 30% for 2025 as well. We've talked a lot about soft landing, no landing recession, and there were like 60% calls for recession earlier this year. It's not off anybody's radar, but the interesting thing that I saw when I was going through Buffett's portfolio is he took a $266 million position in Ulta Beauty. So it is not a disproportionately large position. I mean, obviously, if you want to take away anything that's like a warning to investors, it's going to be he's selling banks, he's pared back his position in Apple. But I thought this was sort of an interesting way into what's called the lipstick indicator. It was proposed by management at Estee Lauder, where they found that in recessionary periods, people were more inclined to buy lipstick. The thinking behind it is you don't have a lot of disposable income to spend on big luxuries, so women are more likely to buy small luxuries just to, give themselves a mental break, right? Like I can't go out and buy a new car, but I can treat myself a little bit by buying some high-end lipstick or buying more makeup or just, improving my appearance. Unfortunately, it's not like we have a ton of data to go on with lipstick sales in recessions, but anecdotally, if the lipstick indicator is something that's actually worth paying attention to, Buffett has actually positioned his portfolio to benefit from that a little bit. So I don't think he's like if he were screaming recession, he'd be selling everything. But the exploratory position in Alta tells me that maybe it's more on his mind than it is on JP Morgan's.
Okay. I'll let you go a little long there, but lipstick indicator. I hadn't heard that
No.
one. Yeah, it almost seems like it was like the Super Bowl indicator, like with NFC wins, good year for the market, AFC or whatever. Or maybe it was original NFL team versus original AFL team. I can't remember, but
Yeah.
um, I don't know how much I buy into that. Ultimate Beauty actually used to be a favorite, a Cabot favorite. I think it was in Cabot top 10 trader and then eventually stock of the week. The portfolio I run hasn't been for a while, mostly because the retail climate slowed. But I wonder if that's just I wonder if that could be a safe bet on retail by Buffett. I don't know. I don't know what to read into
Well,
beyond that. But
yeah, I mean it was beaten down a little bit and popped like 15% after he got in. And he got in back in like August and it's trading around the same levels right now. And like I said, it's not like he's taking controlling interest in it. It's a small portfolio position.
yeah,
Just thought it was an interesting way for us to talk about the lipstick indicator. So if you see lipstick sales going nuts and all the stores in your area are out of lipstick, then
yeah.
obviously that means we're in a recession, right?
Yeah. No, if my wife starts buying a lot of lipstick, I'll ask for a raise. Okay. Big three today. Lots of big ticket items. As Brad mentioned, we'll start off with this morning's jobs report. Only 12,000 jobs added in October. That's not many. 100,000 were expected. The expectations were lower than normal because there's two reasons. The hurricanes, dueling hurricanes or multiple hurricanes in the last month, um, put some people out of work, and then Boeing's mass layoffs. 12,000 still is a small number though, and it really is total whiplash coming off of the previous month. There was what 255,000
Yeah.
jobs, way more than expected. Uh, the market's not panicking the way it did after the end of July when jobs numbers came in much lighter than expected, but that number was even like 120,000 versus what was it, like 160 or 70 or
Yeah.
something thousand expected. Um, Market seems to actually like it. It's up because it can, in everyone's mind, investors' mind, that this means the Fed will continue to floor the accelerator on cutting rates. And in fact, the Fed Watch tool this morning before the jobs report came out, it was 96% chance that they're going to cut by 25 basis points, but still like 2-3 percentage points they were going to do no cut next week. Now it's at 99.8% chance of 25 basis point cut and zero chance of no cut, 0.2% of 50 basis point cut. So you see that's where investors' minds have led. Oh, sorry, I just refreshed and it's now 100%, 25 basis points. Um, so what to make of it? It just seems like we keep getting mixed messages on the economy, and it's probably because it's a relatively mixed economy. No recession in sight, but also this isn't booming growth.
Yeah, I think you've probably heard it. The term people have thrown around the term vibe session,
Hmm.
where or Derek Thompson, who I think you and I are both fans of,
Yeah.
has phrased it as um, everything is terrible, but I'm doing fine or I'm doing okay.
Yeah.
Um, I don't remember if we talked about it in the episode, but the last jobs numbers, there was a little bit of wind in their sails because there was a lot of expiring federal funding for pandemic relief efforts. I
Yeah.
believe it was that was set to expire. So state governments to get those federal dollars had to hire. So there was a little bit of sort of backloading of the numbers there. With when it comes to jobs, I remain sort of on the fence with how accurately they're reflecting the current modern employment picture,
Hmm.
right? You have more people taking part-time jobs, more people doing gig work, less people in just like steady full-time jobs. Job opening numbers have been declining over like the last year. We've seen a lot of downward revisions. Um, it's not a I don't think we will ever have really a perfect snapshot, but even with all that said, only adding 5 digits worth of employees, even with a hurricane, even with layoffs, that is surprisingly low to me. And it does reinforce a little bit that of something that we had talked about in the past, where it feels like the economy is kind of white knuckling it a little bit. Just I don't want to say holding on for dear life, but like, hey, we're gonna get through this, and we'll get to 2025, and things will get better then. Um, I don't know what to take away from it, but I do think that K-shaped recovery is real, and I think we are seeing a bifurcated economy to some degree.
Yeah, I mean, it's just a reminder that anytime, people may have been after the previous month's jobs report, people have been like, okay, now we're taking off again. Fed's cutting interest rates. Here we go. And then this is just another reminder, like, let's pump the brakes a little bit. And earnings, which we're going to get into next, this earnings season has also been a bit of a reminder that some are doing well, but some areas of the economy are, there's still some hesitancy. And I guess this is a good time to just transition into earnings. This was the biggest week of the earnings Q3 earnings season. I think about a third of the S&P 500 was reported. And there are some good results, not just this week, in the past couple of weeks. Amazon just had a good report. Prior to that, Tesla and Netflix. Tesla had a rare good report for them, or
Yeah.
slightly better than expected, which qualified as great for them, given some of their recent reports. Netflix, another good quarter. But then Microsoft, disappointed, and the stock was down 5%. We talked last week about chip stocks missing the mark, ASML, although TSM didn't. So coming into this week is 3.6% earnings growth, with 37% of the market having reported. I don't have the numbers after this week, but imagine it'll be, similarly mixed. Down from last quarter is, what was it, 11% growth, something like that. Whoa. I mean, is it a similar takeaway to the job stuff? Just doing
It,
okay, but not flourishing?
so we have had a little bit more volatility in earnings
Yeah.
reactions this quarter. Um, so just looking at the total moves, um, right now there are of the companies that have reported, 47% of the stocks that have reported have had positive moves after earnings. 53% were negative, but the average return for all companies that have reported is up like 0.1%. Um,
Yeah.
where it where it looks a little bit different though is that in Q3, 89 companies that have reported have fallen 12% or more. 97 have risen 12% or more, and both of those numbers compare to a baseline of only 75. So you're seeing a little bit more movement in the extremes, but in the aggregate, it's averaging out to be sort of a normal move. The takeaway from me on that front is that I don't think even sectors are being treated as monoliths now. We saw pretty disparate results in even the Mag 7, right? Like Microsoft came out and um, there's some disappointment around their cloud numbers. Meta was getting punished because they estimated that their capital expenditures were going to be high. Amazon, though, like you said, I think they were up 7%. Maybe they're up 5% now after their
Yeah.
earnings earnings numbers. So I do think that the sort of general bullish vibe around all things tech has sort of faded a little bit. And it's something that I will probably talk about until we see actual real results. But people are paying more attention to the actual costs and the actual results for all of the hype that we've been talking about with AI lately. Microsoft, I think, is a good example of that because they don't provide granularity in their cloud services. They just lump everything together. But a lot of the commentary on it was they're being punished for for higher expenditures on open AI, which for all intents and purposes, they own that tech. They own everything that OpenAI has developed. They've invested the most out of any of the big publicly traded companies into the stock. So if we're going to be looking for individualized results, we're going to get individualized responses in stock price movements. So I think people are more hyper aware of
Yeah.
of generating returns with some of the hype that has carried us for a long time.
Yeah, and I think you and I a few weeks ago we sat here and said, how much does Q3, how much do Q3 earnings matter with everything else going on? Fed cutting interest rates, election on the horizon, uh, you know, two wars, all this stuff going on. We wondered if it just would be almost besides the point this earnings season. I do think it's been mixed enough where it has had something to do with stocks coming down a bit lately. I mean, obviously, stocks haven't imploded by any means, but they're down, at least coming into today, they're down 2.5% from the highs. And some of that may just be election angst, uncertainty, whatever. Stocks are up 1% today, so really, it's still really not that much of a pullback. But I think I'll put it this way: earnings season hasn't helped move the needle. I don't know if it's put a dent in market, but it hasn't. It's maybe been a little bit more of a dampener on investor enthusiasm um, than a tailwind.
Yeah, especially if you're investing in a lot of individual stocks. If you're in like the S&P 500, right, that's up 1% in the last month. So October was, for all the volatility and all the concern and all the talks and all the things on the horizon, you're up 1% a month. That's great. That's historically sort of pretty much average returns. If you're in some individual names, like you're either celebrating or you're paying a price for being overweight in some stuff. I do think that there were some other factors that hurt chips too. We saw SMCI's um, their accounting firm, Ernst& and Young, came out and said that they
Yeah,
couldn't support any kind of results that they published.
that was a big
They're at
one. Yeah,
risk of being delisted. And I think that hurt a lot of the chip names
yeah,
because they shed like 30% of value overnight and then were continuing to trade down. So there have been some other factors, but in the aggregate, it's still a bull market. We're still trending higher.
yeah,
We're a little bit off the highs, but I think if back in July you were like, hey, we're going to head into a really contentious election and there's going to be more volatility than average in earnings, but you told me that the results would be that the S&P was up 1% for October, I think
yeah,
most investors would take that, right?
yeah, yeah. No, I read about this the other day that we sort of, made it through the, so-called spooky season.
Yeah.
The last four Octobers have seen a bottom, second half bottom, and the last two in particular have seen that year's bottom. And then stocks took off, starting in November. We'll see, and this will lead me right into our next item. But to get through October with, like you said, stocks technically up slightly, is a victory, or even with stocks flat, that's a victory, given all the potential issues out there, and given that the market was roughly at all-time highs coming into the month. I think that qualifies as a victory. So let's talk about next week. So the election Tuesday and the Fed event, which now has 100% consensus, 25 basis points. That is Thursday, Thursday, the
Yeah.
7th. Yeah.
Yes.
Um, I don't know how much that, I guess, depending on what, like Powell says, that his comments will probably be more market moving than the cut, I would think. Um, Election, as we said before, I think it seems like the market's priced in either, it's a 50-50 election, roughly. It's priced in either a Trump or a Harris victory. I don't think either one is going to sway it much. What could, and this is given the close nature of the election, this is possible. What could really annoy investors, at least more than anything, is if this thing drags on for a while. So, last year, there's a very possible there'll be recounts in multiple of the swing states, which I believe we had recounts last election. There was at least one or two. Did your state ever recount? I can't remember.
Kind of. We had an audit. We were sort of too
Audit.
close to call for a long time, and then I think Fox was the first to call
Okay.
Arizona for
Yeah.
Biden.
So the last election, I think it was the Saturday after the election when it was officially called for Biden. And that, that's That's a few days. That's not if it's a similar scenario this year where we wait like a week, I don't think that'll be a big deal. If there are multiple recounts, audits, whatever, any of that stuff, and a winner is not declared for say weeks, certainly if it goes into like December, I'm not forecasting that, but with an election this close, you never know. That would, I think, throw a wrench into the theory that the market usually takes off after an election, just having an answer, and in November and December usually being two of the best months on the calendar. I think a dragged out ballot counting process, and some questions around that, and whatever prevents an answer from emerging, within the week, I think would weigh on stocks for sure.
Yeah, I think you're right. The surprise is the thing that's going to hurt, right? Like if the Fed came out with their meeting, Tyler wrote to his subscribers that he's a little bit skeptical of the 100% rate cut chance. And if the Fed if Powell came out and said we're not going to cut rates this quarter, um, that kind of surprise would shock markets, right? Like,
Yes. After 12,000 jobs added in October, that would be a shock, I would think, at this point. I didn't think Tyler, in
yeah,
fairness, I think he might have wrote that before the
he
12,000
did.
jobs came out. But yeah,
Yeah, so
yeah,
this was a surprise, but like inflation is sort of generally where the Fed wants it. GDP was growth was a little bit slower than expected. But I think by that same token, if we have a surprise outcome, like there's nothing surprising about a close race that takes a few days to settle out. There's nothing surprising about either party winning.
yeah,
The thing that would be the surprise that would be the market risk is knockdown drag out fight that lasts a month or something that goes to the courts or
yeah,
right, like there's a lot of variables out there that I don't think you can really effectively price in. You can maybe hedge for a little bit, but um I don't. I mean, the outside shot of a huge fight lasting almost to inauguration day is what are you going to do? Like you
yeah,
can't really predict how people are going to respond to that. Um, so I will also flag, just because it came across the newswire last night, that Iran is now promising more reprisals in
yeah.
Israel, saying that they're going to attack from Iraq. So like there is plenty of stuff. There is fertile ground for unexpected surprises in November. But if the surprises don't materialize, I think the market takes it in stride. Everybody is aware
Yeah.
of the risks and they're looking out for them.
Yeah, I just Googled when was the 2000 Bush Gore election called. It's December 12th. The
Yeah.
Supreme Court decided it. So it probably felt like longer than that, but it's what, a month and a week, roughly 5 weeks after the election. I'm sure in the moment, if it's dragged out this time, it'll feel like an eternity. But in the grand scheme, that was a little over a month. I can't see. I'd be surprised if we don't have an answer longer than something like that scenario this time. Um, I guess you never know. But I think if this time next week, if there's still no answer or you know, no clear lean one way, because I think it was called on a Saturday, the Saturday after the election last time for Biden, but it was pretty clear for a few days before that Biden was gonna win.
Yeah.
So it sort of had an answer. If it's still totally unclear a week from now, I think you'll see stocks start to fall until some clarity emerges. But again, likely to be a temporary problem. I'll let you vamp for a second. Well, I want to look at what the market did the month after the 2000 election. Uh,
Yeah. I was 17 at the time, so I don't have a great memory of what was happening in 2000. I was more I don't know, I was more worried about where I was going to college. But the media environment is a lot different now than it was back then. We have social media that's widespread. We have immediate reactions to everything. We have constant news coverage. And we did in 2000, but not in the same way that we do now. So I think there's more room for angst and headlines, but I
Mhm.
don't think that we should use that as an excuse to read more into results or into the economic implications than is actually there. Um,
Right.
it certainly sets a stage for us to see a ton of smoke and maybe not any fire, even if it's drawn out for a week or 2 weeks or something along those lines. Um, I think as long as there's a light at the end of the tunnel, even if it's a protracted process,
Yeah.
then you can pretty feasibly just say, all right, well, I'm not going to sweat the headlines. I'm going to pay attention to what's actually happening. So I
Yeah.
do think that I think everybody needs to just take a little bit of a chill pill around this.
Yes, around a lot of things surrounding this. Okay. I found what the market did in 2000 from election day, which was the 7th, November 7th. Um, it went from, see, 1431, this is S&P, 1431 close that day to, it bottomed. The bottom was actually later in September after we had an answer. But until the answer came December 12th, the market was down a little bit for 1433. So that's not actually, no, that's about flat.
Yeah.
The bottom came later. I can't speak to what happened the rest of that month. Maybe it was just a sort of delayed reaction, but then stocks bounced back a little bit, but that was also after the dot-com bubble burst and everything. That's a whole different environment. So
Yeah.
it wasn't like the stocks totally imploded during those 5 weeks. They didn't go up really, but it wasn't total panic. It doesn't look like. So hopefully it'll be the same here if something like that happens. Um, okay. So speaking of investing and politics, we're gonna try and do a segment where we don't get political, but talk about this is your baby. I'll let you say what you wanted to do here.
Yeah. Look, the election is everywhere. We're gonna jump on that election talking train, but we also don't want to like get political. That's not why people are listening to this
No.
for the most part. But I thought that we would look at some of the trading activity of senators and members of the House and just get some interesting data points. Part of what inspired this is uh, there was this tracker online called Unusual Whales that I think has been shared a couple of times that showed the performance of Congress of members of Congress and senators uh, or members of the House and senators, I should say, their trading performance. And there's been a lot of talk about whether individual politicians should own stocks and whether or not that's appropriate. Um, in 2023, only 32 elected officials outperformed the S&P 500 against a total of 535 in aggregate members of the
Wow.
House and Senate. Um, 212 of those had reported trades. So it's not like they're out here wheeling and dealing and they're making money hand over fist. There was actually a recent study that found that in the aggregate, elected officials were no better than random chance at picking winners and losers. Now, that's not me endorsing elected officials trading. That is me saying, I mean, like, yeah, let's keep money mostly out of politics, but that's me saying that, hey, chill out a little bit. But I
Yeah,
did want to
they're not they don't politicians do not make good investors. That's pretty clear.
no. So I wanted to highlight some of the individual results. So I sent Chris a list of 10 members of the House and members of the Senate. And I'll read the list out, and then Chris, I'm going to give you facts about them, and you have to identify which elected official matches the fact.
Okay.
So on our list, we have Ro Khanna, who's a Democrat from California. We have Mitch McConnell. We have Michael McCaul out of Texas, Nancy Pelosi, Marjorie Taylor Greene, the vice presidential candidate, J.D. Vance. We have AOC and Bernie Sanders, Rick Scott out of Florida, and Tommy Tuberville out of Alabama, the coach.
I think it's
So
Tuberville.
is it Tuberville? I don't.
Yeah, I watched some college football, so
Uh,
that's the only reason I know that.
I'm not an SEC. He's SEC, right?
He was Ole Miss and
Yeah.
Auburn, I think. Yeah.
My football team just gets stomped by every actual football team, so I don't read too much into it.
Yeah.
All right, so I'm gonna start with one. I want the entire like pool to be open because we have come down pretty hard on ARC funds. So of the reported trades, this elected official is the most frequent trader of ARC funds.
Of ARC funds.
Of ARC funds specifically, who's the one person that doesn't listen to us when we say that Kathy Wood doesn't know what she's doing?
I am going to guess Nancy Pelosi.
No, no, it is Tommy. Uh,
Tommy.
he,
Really?
yeah, he is the most frequent trader of ARC funds. In fact, only one other elected official has traded in or out of those at any point, and it was a sell, so I don't have any real data on it.
Oh,
All right.
he's sold ARC funds, is what you're saying.
He's been buying and selling them incrementally. His most recent
Gotcha.
transactions were closing, but he's the only one that has shown a sustained interest in ARC funds. I will say
Mm-mm.
for
Stick
some
stick to
con
football for him. Anyway, go
yeah, maybe.
ahead. Yeah.
For context, the most frequently traded security is Apple amongst all elected officials. The largest dollar amount of investments outside of treasuries has actually been Microsoft. So you're seeing just like the investing public reflected in what
Yeah.
the elected officials are doing for the most part.
Play the
Uh,
hits.
all right, so on your list, you have the most frequent trader with 15,000 trades in the last 3 years,
Hmm.
900 trades in the last 3 months. I would like you to guess who on your list that is.
Most frequent trader. Um, Marjorie Taylor Greene.
No, it is Ro Khanna. Ro Khanna is
Yeah,
churning his.
I don't know much about Rokon.
He is absolutely churning his account. He has 3 times as many trades as anybody else on the disclosure list. The This person has done the largest dollar amount volume of trades at $600 million reported in the last 3 years.
Hold on, rephrase that again. Sorry.
So the largest volume of trades at $600 million traded in and out in the last 3 years.
Mitch McConnell.
No, it is Michael McCall of Texas. He's also second on the list with 5,000 trades in the last 3 years. He's also, I'm going to point this one out because I thought it was kind of interesting. He's also the only one that has really taken a recent position that is pretty political. He added exposure to a company called Aramark, which does food service, but they
Hmm.
do it for things like stadiums, private prisons. They do it for detention centers. So he's the one that has made sort of the most political trade where, there's a clear alignment between some of the proposed policies, say lower minimum wages, things like that, and the position taken. All right. I we're narrowing this list down. Okay, here's your next one. This person had 3 million in new buys this year and has arguably the best diversified portfolio of any of the disclosures with broad exposure across industries, asset class, etc.
Best diversified is that what you said.
Yeah.
Um, hmm. I am going to say AOC.
No. Marjorie Taylor Greene.
I'm
She actually had
always one
not
behind on these, it seems.
she had not been buying a lot of investments over the last couple of years. I believe she's going through a divorce. It may have something to do with that, but she has taken a great stance with diversified exposure to a lot of individual equities. So good on MTG for actually running the portfolio in a smart way. All right. This person has no trades reported at all in the last 3 years.
Uh, Bernie Sanders.
There, you got one.
Yeah, I
That
mean,
was
I live in Vermont. I gotta get that question.
yeah, I didn't have a lot
That's
to
his
go
whole
with.
thing is railing against Wall Street. He would have to know he'd be look like a huge hypocrite if he traded it at all.
Yes. Yeah. So that there were, I mean, obviously the majority of the group of the 535, only 212 had disclosed trades, but I had to jam some of the loudest liberal voices in here as well.
Yeah.
All right. This investor has predominantly is invested in municipal bonds, does not appear to be taking any politicized positions in individual stocks at all.
Um, JD Vance.
No, it is Rick Scott of
Yeah.
Florida. He is one of the wealthiest elected officials on the list. And he's doing what wealthy people do, which is buy a lot of municipal bonds, avoid paying federal taxes on that income. All right, let's
Yeah.
see.
He should subscribe to Cabot. Might be able to help him do a little better than municipal bonds.
Well, but he's got so much money that I think he's worth 200 million plus. He's got so much money that when you're at
Yes,
that,
safe place to park.
yeah, unless you're buying yachts, you can just live the rest of your life and never have to worry about it.
Right.
All right, our list is getting kind of thin right now, so let's
It was
go.
fun though. I like this. This is a good game.
All right, this person is predominantly invested in ETFs, spiders, the triple Qs, DIA, and TLT.
Let's see. How many do we have left?
We've got like four
One,
left.
two, three. Yeah. Um, Gosh, that doesn't really tip the. I mean, I feel like I've guessed all the ones on the list that are left, so I'll just be guessing again. Um, I'm gonna say McConnell.
No, it is JD Vance. So
Wow.
JD Vance has the second best looking portfolio on this list.
Okay.
Nice diversified exposure through ETFs. He's got, like many of these politicians, they have private holdings as well, but he's predominantly invested in some ETFs. I particularly like the TLT play. I think I've been vocal about that one as well. All right, I'm going to give you like one more, and then I think we sort of got to call it because then you're just going to be coin flipping
Right.
it
Then you
for the
just tell
rest
me
of it.
after that. Yeah.
Okay. This person has primarily been investing in Wells Fargo. They've been building up a position in Wells Fargo repeatedly over the last several years.
All right. Who do I have left? McConnell, Nancy Pelosi, and AOC. This feels like it could be a trick question. Um, Pelosi?
It's Mitch McConnell.
Oh
Big,
God, I'd already
big,
guessed him twice. That's why I didn't guess him again.
yeah.
Seemed too
So
obvious.
yeah, he's a big finance guy.
Yeah, that
Um,
makes sense.
getting contributions from big money. So the last two here. All right, this person also has no trades in the last 3 years.
AOC.
Yeah, I think she's probably the lowest net worth elected official or close to it, coming from a bartender. She
Yeah.
is pretty anti-capitalist.
Yeah, that doesn't mean she doesn't have the money to invest, but that's her brand, similar to Bernie.
Yeah,
She'd
exactly.
look bad if she did it. Yeah,
Yeah, if she was buying like Exxon and Chevron and stuff like that, she would look like an absolute hypocrite.
right.
The last one, the fact, Nancy Pelosi is the last one on the list. Biggest position, or the position that she's gotten the most fanfare about is Nvidia, trading options and individual stocks as well. But for the most part, these are people that are looking out for their own individual best interests. There actually is not a ton of politicized trading that I was able to find other than the Michael McCall Texas play. But I don't even think that that's necessarily any kind of inside info that's reflective of somebody who's voting with his wallet, right? He's like, if he thinks Republicans are going to win and they're going to start tamping down on federal minimum wages, or there's going to be more incarceration, then you
Yeah.
want to invest in somebody that's going to be providing like food service there. So, um, I don't
And
know. I hate.
aside from that one, it seems like a lot of the investments are pretty obvious. Nvidia, Apple, QQQ. I guess, some of the JD Vance stuff is a little bit more nuanced than I would have, but he's, diversifying, which is what you're supposed to do. Um, you
Yeah,
know,
it's buying a
municipal
bunch of
bonds. It's
ETFs.
not, it's not, they're not going out there and doing Michael Burry stuff. Is that how you pronounce it? Or,
Right.
anything terribly innovative. And the fact that it's heartwarming to hear that how few politicians have beaten the market.
No.
30 out of 500
Thir-
plus.
yeah, 32 out of 32 of them. And like, all right, the other thing is like this is all based on reported trades. So could some of these people
Sure.
be trading and not reporting it? Yeah, absolutely. We
Yeah.
see the non-disclosure thing come up most visibly with like the Supreme Court, right? It's not like people don't disclose things all the time. A lot of these investments are reported through family member accounts, like children and spouses and stuff like that. McCall's position, Aramark, is not reported as an individual position. I think a lot of Ro Khanna's trading, it's either McCall or Ro Khanna's trading has been a spousal trading as well. So these are people that have to disclose financial activities for entire families and not just individuals. Uh, I don't think politicians should be trading because optically it looks really, really bad.
Yeah.
But this is another one of those things where it's like the best answer that I've got or the best explanation I've got is, hey, let's all just calm down and like turn the temperature down a little bit. Yeah, it's probably bad, but it's not as bad as we're worried about. We are so socially, we're so fear driven and anxiety driven and anger driven and all that stuff. It's I don't know. I try and be optimistic, but it's hard. It's hard
Just
to
not
be
about
like
the market.
I'm optimistic about the market. I'm
Are you?
over a long enough time horizon. Yeah.
Okay.
Um. Yeah. These people aren't boogeymen.
No.
They're investing in for their own best interest. They're doing what's right for them.
Yeah.
Um.
There's enough for people to be angry about these days without being angry about
Yeah. But
politicians, almost universally underperforming the market, you
it
know.
it is a bipartisan. It is something that has a ton of bipartisan support, which is getting politicians out of individual trades, and
Right.
that's
Yeah.
I think exactly for the optics reason that I had mentioned, which is it looks really, really bad for the most powerful people in the country that have access to most of the information, including where federal dollars are being spent to potentially be able to profit off of their knowledge. It looks really, really bad. And it's good that it's not hugely problematic, but that doesn't mean that it doesn't have the potential to be.
Yeah. Yeah. No, it's a fun that was a fun game to play, regardless. I like that. I don't know if you made it seem as if there are some curveballs in there, or if there were a few curveballs early and that threw me off completely. But um, yeah, I missed a lot. I was like the Yankees in the fifth inning the other night. Lots of blunders, but at least I got the Bernie one. I'm proud of that. That's a good place to wrap up our last pre-election episode. We'll be back here next Friday in what could be a very different world, or from an investment standpoint, maybe just the exact same world. Bull market, and let's hope that continues. Any closing words, Brad, before we finish up?
Yeah, get out there and vote, make your voice
Yes,
heard.
vote. Yeah, yeah,
If you have strong opinions, all right, share them, but you're not going to change people's minds. Or
yeah,
if you want to try. But turn the volume down, vote, be nice to each other.
yeah. Vote and subscribe to Cabot Wealth advisories. Those would be my two.
And
My
go
two.
watch Harry Potter. Right,
Go.
Brad?
Oh yes, yeah. Oh, Madison, yeah. I'm glad you chimed in. Yes, we got to close with that. You finally watched Harry Potter's for the first time last week. How many? You watched the first three? Is that
Well,
right?
you guys didn't tell me there were like 39 of them. So I thought we were going
Yeah.
to get
Well,
through all.
Brad doesn't even know because he's the biggest
I've seen all of them.
Harry Potter hater that I think out there, probably.
Sure. Yeah, I'll wear that. That's fine. I've seen all of them.
Yeah.
Ridiculous.
Yeah. Oh, my kids may burst in the door right now and
Wait,
figure out.
Did you like these?
I'm only on number 4. We like started number 4 last night, didn't finish it. The first one was like cute, and I, even though I've never seen them, somehow felt like nostalgic about it. The second one felt like a repeat of the first one.
Yes, yes.
Third one, I was like, oh my gosh, that storyline, time travel, so good. They're so above their time. Fourth one, dragons and mermaids are like, I zoned out. I
Really? Okay.
Yeah,
Yeah. I like the
I
fourth one, but
I know. Remember you saying that was one of your favorites? I was like, Chris is gonna be so disappointed.
time
yeah.
travel has been a thing for like over 100 years, right? Like Jules Verne, didn't he write about time travel? Um,
Don't yuck her yum. Come on.
all
All
right, it's fine. You
right.
guys can just
Plot
go eat
twist.
candy corn and
So
watch
are
Harry
you
Potter.
out now that Too Many Mermaids in number 4, Madison? Are you
Oh,
done?
no, 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 no.
Okay.
I'm in it. We'll go all 8.
Okay. Well, we'll get a full report from you. We'll do a weekly check-in on this and just to see where you're at with them.
Good plan.
I do
Um,
think the actors all do a solid job. I think everybody fully buys in. The Wizarding World in Orlando is pretty fun if you get the infrared sensor wand and it makes it look like you're doing spells in Harry Potter land. I have been there. I've had butterbeer. Like
how is
if I were
butterbeer? Is it good?
no,
Okay.
it's like a candy beverage. Um,
Sounds like
but it like right, I've done all the stuff. If I wasn't vocally opposed to it, you would think I was a fan. My wife and kids liked it. I just think it's dumb. It's dumb and bad, and you should feel bad if you like it.
wow.
No, that's not
You're
how I
the
think.
best podcast host for
Go out there,
No.
you just said go out there, turn the volume down, be nice to each other. But
It's
if you like
dumb
Harry
and bad.
Potter, you're a bad person.
No, I don't really mean that. I'm leaning into it for the podcast. I just don't care for it. It's a little bit juvenile and it appeals to an inner child that grew up in me long ago. So
Okay. I love it, but I agree with you, Madison. The second one sort of drags.
It did. But Harry
Yeah.
Potter World is really, went to Harry Potter World before I ever saw these and was so impressed by it. Like, now I feel like I want to go back to it because I understand a lot of what's happening.
that's fun.
Like,
If your kids like it, you should take them. The tip would be don't get in line to do the magic trick stuff because then you see the people in front of you and you see the result. Find the ones that nobody's in line to do, and then just do whatever little wand twitch spell it tells you to do. It's fun and unexpected.
I don't know they did that.
It's a great place to close the episode. Go to Harry Potter World and skip the lines.
And vote.
What do you got? What do you got? One more thing, Brad. What do you got? Any more
No,
slander? Okay.
no, I'm not going to slander it. I think we should cut this part though. That
Oh, no, we're leaving this
is out
in.
of
Especially
character.
now that you've said I think we should cut this part.
Yeah, I don't hate it. Well, I mean, I don't like it.
You know that we only
I'll just
cut the goodbyes or the thank yous from guests at the very end of episodes. That's usually how Madison does things.
Okay.
But,
If you don't start talking within 0.8 seconds, you're out.
yeah. Well, thanks everyone for joining us, and we'll see you again next week with a post-election, post-Fed cut episode.